totally fine. So my name is Sahar Hassan. I'm taking this class, a financial analysis class, Sigma analysis class at Geneseo as a prerequisite for my master's program that I'm going to be starting in the fall. And I'll be talking about large tech companies prepare for acquisition spree, which is mainly what I mentioned earlier. The smaller companies are struggling for cash and are looking for ways to fund their operations. And like during this environment, as their revenue is declining, large companies are finding perfect opportunities to acquire smaller companies. So the article overview, tighter market could leave fewer options for cash-constrained small companies and startups. Large tech companies will be looking to expand into new markets to fill in the gaps that were created by the surge in demand that the regional lockdowns created. Large tech companies are targeting markets such as cloud computing, retail, health and wellness tech, food tech, mobility tech, and supply chain tech. The current crisis presents potential opportunities for large companies to expand their capabilities by acquiring smaller companies that need liquidity. Except for a handful of deals of M&A, that is mergers and acquisitions activity, sharply decreased as a result of COVID-19. While overall M&A deal flow is down as a result of COVID, a handful of large companies have already and will likely to continue to prey on cash-constrained small companies and startups.
So they're taking advantage of companies that have a good idea but don't have enough money.
Yeah, exactly. And one of the recent acquisitions were Grubhub and Uber. Uber generated a lot of their revenue from basically Uber Eats, their Eats segment. So they're looking to expand into that market. However, Grubhub I don't think they acquired Grubhub. I think a European company called, not sure of the name, Eats or something. I can look up the name later, acquired Grubhub. And smaller companies will face risk of being owned by a few big companies, which will result in end users facing the risk of having fewer vendor options. I mean, we already have fewer vendor options as is, because Amazon is have the biggest share of the market. Yes, they're sourcing from different vendors, but still you can see the emergence of Amazon products. So, I mean, this is going to even make a smaller vendor market.
Mm-hmm. Would that mean prices would go up for things?
Yeah, because you don't really have that option of picking and choose. There, when the competition reduces, I think the economy, the market is monopolized by a big company, which means that they can set their prices, as opposed to having competition from other companies, and competition determine the price. But in this aspect, the prices is determined by, that's what I think, by Amazon.
Yeah, I'll hold my next question and let you get going. Maybe you do address it, so keep going.
Okay. So how COVID-19 is affecting the startup ecosystem. Venture-backed startups are mostly vulnerable to recessions and economic slowdowns. We saw that happening the great financial recession of 2007, 2009. We saw a sharp drop in investments, venture-backed investments. And headed into a recession, the overall drop in demand due to COVID-19 will leave startups with no revenue, which will lead them to rely on outside capital, venture debt to fund their operation and growth. Continued reduction in the funding environment as venture investors adjust to working virtually and begin to scrutinize deals more strictly during times of economic contraction. Many deal makers are unwilling to close multi-million-dollar transactions without physical meetings or a handshake.
Well, that's a good point. is that a lot of these deals were based on feelings and talking to people. But now do you think they're going to focus more on the financial numbers and give more attention to that?
I think they're going to be like more strict in selecting. Like there are a lot of ideas that in the past that investors are willing to experiment with, but in this kind of market where cash is like really, I don't want to say scarce, but like liquidity is really like constrained. I think they're going to be more selective.
Mm-hmm.
Okay. Yeah, and
Okay.
they're gonna try. I think they're gonna try to focus on deals that will generate like short-term revenue.
Sure. Paige, what do you think?
I think that makes sense on what Sahar said. I feel like when you're in person, you can, like you were saying, you can go off of like a feeling. But now that that aspect isn't there, that it's going to be a lot harder, and maybe we won't see as many deals being made between businesses.
Mm-hmm.
Because they're going to be focusing so much more on the financial aspect to make sure that they're not making a bad financial decision.
Mm-hmm.
Sorry, an example of this is I've been watching Shark Tank. I've been binge watching Shark Tank. And a lot of the times where like the investor, the sharks want to invest, they're like, oh, well, I have a good feeling about this because of their interaction with the person, because of how the person's presenting the deal, their passion. Now you're eliminating that. Now it's just basically financial statements. And really, financial statements tell you something, but it doesn't tell you everything. It doesn't tell you like how efficient the team is, how hardworking the team is, and like all these other aspects that are not captured by hard numbers.
Mm-hmm. Hey, Joe, how do you think Smith would react to some of this? That the entrepreneurs and the startups want to have this feeling. How do you think do you think Smith could ever get into venture capital and get a feeling?
Well, we're seeing that now with Dan's feeling on Fitbit being bought by Google, and Holton made that big trade with that company last Tuesday, so that was interesting. So if companies are moving forward to buy like smaller companies and make like acquisitions through that, that would definitely like shoot up the stock price, and we could do more swing trades.
And this is open question at this point. Is there any other companies like Joe just described that we should maybe look at to make some money?
I mean, there's always plenty of companies floating out there that have great ideas. The problem is, do they have the public publicity to be actually seen? I know of several tech startups that I'm interested in, but they're designed for such a niche market that probably no one here has heard of them before, like R3 Magic and Microjet as examples.
What were those again?
R3 Manufacturing and Microjet.
What do they do?
R3 Manufacturing is supposed to be coming out with a new 3D printer process to allow for faster, more economical 3D printing equipment, to allow for more rapid prototyping within the industry, to compete against actually Xerox, which is one of the larger 3D printing companies that no one knows of that side of their operation, then Microjet, which is if I remember their briefing correctly, a flight share organization for like executives, similar to JetSmart, I think.
Okay.
But again, those are very niche companies that don't have a lot of public recognition.
But the R3 one could be a company that Xerox, which has has a strong balance sheet, could scoop up.
If their system works out, absolutely.
Okay.
Right now, the only reason why I know of them is they're doing a funding goal on Start Engine, which is designed for smaller end investors in the like $500 to a couple $1,000 range individually to participate in.
Okay, good. I think we got to. I'd love to find some of them. If anybody has any ideas,
Okay.
Go ahead.
So this graph shows the like it's a comparison between the 2008 recession with COVID, and you see how the VC deal activity significantly obviously increased in 2019, but then it went down to recession level, even lower. But we're still in the second quarter of the first year, so these numbers are not updated. We might mirror 2008 numbers. But yeah. I'm going to be focusing on the industries that are impacted the most by coronavirus, which is health tech and wellness, food tech, mobility tech, and internet and other things. The impact, COVID impact on health and wellness. While changing legislation is boosting telemedicine, telemedicine startups in the U.S. are experiencing a high increase in demand amid the pandemic. The volume of virtual visits have almost doubled for AI-enabled telehealth platforms and virtual clinics. Visits have surged roughly 40% since the beginning of the COVID-19 outbreak. Increase in demand for mental wellness applications as pandemic anxieties worsen. Mental health startups have experienced a surge in demand. Average hours spent on mental health and fitness apps spiked about 30% in the US from December 29th to March 1st. Increased demand for home fitness application and devices. As gyms around the country close, individuals are forced to transition to at-home workout and fitness. Devices and applications are gaining traction. Peloton is a really good example because when Peloton released their IPO last year, I was like, who wants this? Nobody wants this because everyone wants to go out and go to fitness classes. And there are so many platforms like ClassPass that enable you to pick whatever class you want and try different gyms. And we mostly know that those treadmills or whatever just sits at home and just collect dust. So when they went public last year, before the Corona outbreak, I was like, oh, this is not going to do well. And it didn't do well. Their stocks went up when the IPO was released, and then it significantly went down. On March 25th, I was talking to a friend, and I was like, Peloton might be a really good investment because there are no gyms. People want to work out. And they always, people prefer the live interactive workouts as opposed to do it yourself.
I think these gyms are going to be able to open. Because isn't a lot of gyms is you're using a lot of, you're working out, you're sweating, heavy breathing, you're close contact.
Exactly. And trusting that people are just gonna clean after themselves too is just, in a busy gym when, I don't know. I think I think the at-home fitness application devices probably is here to stay for at least a year or so. So Peloton stock significantly increased in the beginning of April. It went up 25%. It went up from 30s to 60 and then dropped down to 40 now because there was talks of opening up. But it's just impressive how the crisis changed things, like a company that wasn't really making money. Yeah.
Joe, are you going to go back to the gym or are you going to do stuff at home?
I'm probably just going to keep on running and do body weight workouts. So
okay.
I'm going to go back to the gym.
Jillian, what about you?
My mom is actually a personal trainer, so she's training through Zoom right now. So
how's that going?
For her with Zoom?
Yeah.
It's pretty good. I think that some people are obviously kind of a little tight right now with money. So she had a few clients who can't really afford it anymore, but she likes it because we have a home gym here, so she can kind of do that in her own time. She doesn't have to go through the gym in terms of kind of taking a little bit of her money. And I know a lot of her older clients don't really want to go back to the gyms when they open because they're at higher risk. So I think that even when the gyms do open, like they're obviously not going to be allowed to be at full capacity, but I don't think they would be that at full capacity anyways, because I think a lot of people recognize the inherent risk of going there and mingling.
Okay. Now, the other one is which is fascinating to me, is telemedicine and robotic and remote monitoring devices. Now, Austin, I see you joined us. Welcome. You've sort of had a little bit to deal with the healthcare system earlier this spring. What do you think about opportunities within telemedicine, robotic, and remote monitoring innovation? Do you think there's really a market for that? Will it take off?
Well, first of all, good morning. Hello, everybody. I honestly, personally do believe that there is a market for it. As we were just talking about, all these gyms starting to open back up, for the older people, they're going to be a little hesitant to, go back into public because they're at higher risk. So I think it'll be the same for, not only gyms, but for the medical industry that, although we may be going back to, some kind of normalcy within the next few weeks, month or so, I think, all these telemarketing, I think it will have to continue until there is a vaccine, at least for the older generation. I know this morning I actually have a doctor's appointment in about 45 minutes, but I can't even go to the office yet still. My whole examination for my hand injury is still over Zoom. So what you're saying is the doctor is going to look at you and how you're progressing without physically touching you. That's how it's been going for the last couple of weeks, as crazy as it is.
How do you feel about that?
At first I was, a little bit unsure of how could this be, the best solution to this. But I mean, at the same time, it seems like it's the only thing that you can do. Am I getting, the most accurate examination of my hand? Probably not. But I mean, I guess it's something.
Yeah. Okay. Yeah, I think that's going to be the big one, is this health and wellness is really going to take off.
Yeah, definitely. I had a virtual appointment with doctors. I've been having these headaches, and it was my first time doing a virtual. I never thought that this was possible. It was a little bit weird, but it was so easy for me to go on there, get an appointment. The platform is amazing too. They're really easy to use. I think, to be honest, we're probably going to move to that direction of even getting blood tests done. I don't know if you guys heard of 23andMe. They send you kits with instructions or how to do things. In 5 years, we're probably going to be able to draw our own blood and just put it in a kit and send it back. I see that happening because if they have, they managed to do that, the DNA testing.
Mm-hmm.
Why not that in 5 years? Obviously, with the right tools and equipment of
What about 2 years? What about 1 year? What about 6 months?
Probably. I don't know. I'm saying 5 years, maybe. Who knows? Probably sooner. No one knows. Okay. So a spike in demand for hospital robotics and remote monitoring device innovation. That's what we're talking about. In the short term, this probably would take off, but long term, it might slow down. However, I think there's a lot of healthcare segments, for example, psychiatry or that could be taken to virtual, since really there's no need of, in-person examination. That's what I think. But
sure. Which could make it more accessible.
Exactly.
Behavioral health more accessible.
Exactly. COVID impact on food. Key product categories: ghost kitchen, online grocers, apps, and marketplace deliveries, delivery robots, and kitchen tech and robotics.
What's a ghost kitchen?
It's basically just having a kitchen in a restaurant that operates just for delivery as opposed to
okay.
yeah.
Gotcha.
So basically, that's where like all restaurants are now. They're ghost kitchens. They're really, they're not really taking in any customers. So catalysts for delivery services, government mandated restaurant closures and quarantining is driving demand for grocery and food delivery services. Startups that could benefit from the surge. Demands include Instacart, DoorDash, and Drizzly. Ghost kitchen model is becoming more strategic. Demand for ghost kitchen facilities increased in the short term as restaurants try to offer delivery services to compensate for the sharp decline in dine-in business. Online grocery could see permanent share gains. The pandemic has driven an increase in demand for online grocery delivery services as consumers are told to lock down and self-quarantine. Walmart, for example, their online sales grew by 74% and store sales jumped 10% in the first quarter. Meal kits to get a short-term boost. Meal kit providers have faced many challenges in recent years as consumers' demand decreased. Prior to COVID-19 outbreak, Blue Apron's net revenue dropped 32% in 2019, and the stock price fell from about $29 to $2 per share in early 2020. After Blue Apron announced the global pandemic is increasing demand for their products, the stock price went up to over $14.
Do you think there was, and this is a question for everybody, do you really think their profits went up enough to justify that increase in stock price?
Honestly, the stock market is behaving, I don't even know what's happening because I don't think the stock market is mirroring what's happening. Like, I mean, yes, it dropped significantly. It had that significant drop, but then it went back up. Okay. And I think it's more trading, really. It's like the demand for stocks. You know, people, I mean, I think there's a lot of market manipulation through like buy and sell.
Okay.
Like people buy shares when like bear market, stock goes down, they buy the shares, perfect opportunity. Like for example, like solid companies, Starbucks, it's not going to go anywhere. At least that's what people think. It's not going to go anywhere. It's there to stay. Let me buy Starbucks shares. And then especially right before the whole like announcement of like opening phase 1 and phase 2, you saw like a spike in share prices. And then as soon as like news with like second wave of coronavirus happening, shares went down. So I don't really, I mean, I don't know. I don't see like that. I don't think the stock market is mirroring what's actually happening right now.
I agree. Paige, what do you think?
I agree with that. I mean, I don't have like the greatest knowledge about the stock market. I feel like I just kind of know the basics at this point. But I feel like things are changing with businesses and just the economy in general so much that I just don't see how they would be able to keep up with that and how quickly everything's changing. So I agree that it's probably not able to mirror what's going on.
Okay. David?
I have to say I'm not sure that the 100% that the stock market is reflecting reality completely. I know, at least in the case of Blue Apron, the last time I had heard about them back in 2019, I haven't been following them. I thought there were concerns that they were going to be that they were looking to either be bought out or have to file for bankruptcy. And I can't imagine they could just pull this type of turnaround this quickly, particularly with the cost increases as well of having to meet demand under the circumstances. So,
good point.
My initial gut reaction is this sounds fishy, and I would have to be much more careful about investing into this.
Yeah, Joe?
I think the stock market is really unrealistic, reflecting the time we live in right now. In February, it was announced, well, this month it was announced that in February we entered a recession. So there's really no reason for it to be as high as it is. And like, Hertz, all these stock prices are jumping up and down. Like Southwest, or one of the airlines, announced that they're going to increase flights in July, and their stock price went up 40%. So
that's illogical.
Really?
It's illogical.
Oh, it's illogical. Yeah, of course.
Yeah.
So I mean, I don't know. I don't think the stock market is reflecting reality right now.
Jillian, do
So
you think we just might be a little biased that we're relying on it and we don't see enough hope in the future? You think we're being unrealistic and saying, yeah, this is just transitory. Stuff is going to pass so quickly, we'll be back to normal.
I think that the changes we're seeing are likely going to be like last into the future, and I think that's why, like, to a certain extent, the drops that we're seeing aren't. I don't think those as are like unrepresentative as a lot of the spikes, if that makes sense. Because I think that like when certain events are happening, like we're reopening or whatever, people will be like investing. But I think that a lot of industries are going to continue to suffer in the future, and we're going to be living with the effects of this for a long time to come.
I think you're right. Austin, what do you think these people are thinking? Are they just trading, or do they really believe there's value? Austin, are you there? Okay, we'll catch him on the next one. Go ahead.
Okay, COVID impact on mobility. Food delivery temporarily replaced people and share riding. Mobility platforms diversified in delivery are likely to be better insulated from the impact of the coronavirus. Uber saw its two primary business lines completely diverge, with each net revenue growing by 124%. I mean, I think that makes sense a lot, since people can't go out and like use Ubers, like they're like instead they're using the Uber Eats, but also like I made a comparison between Lyft and Uber. Lyft doesn't have that segment, the Eats segment, and you see, I mean, obviously Uber has a bigger market, so like naturally their like net revenue is much higher, but as a percentage, Lyft lacks that that segment. So Lyft is not really as doing as well as Uber right now. Autonomous vehicles to experience near-term impact. In the short term, we expect a pullback in investing in autonomous technology as automakers and suppliers reduce spending in the space. Self-driving companies, Waymo, Cruise, Argo, AI, and Pony. Ride-sharing hit by declining trip volumes and increased costs. Social distancing and mandatory lockdowns is having a significant negative impact on the already pressured ride-sharing industry. This has already been felt in China with ride-sharing giant Didi. I can't pronounce the second. If anyone can help me, like that would be great. Or if someone heard of that, like that company before, because it's my first time hearing of it. Anyway, reportedly seeing over 50% decrease in active users, which is normal. People are really self-quarantining, so that makes total sense. Meanwhile, U.S. ride-sharing companies Uber and Lyft have suspended carpool services. COVID impact on Internet of Things. Well, we've heard of all these healthcare apps taking over. Like the remote patient monitoring to supplement strained healthcare system is going to be like, it's a short-term strategy to keep like the healthcare system flowing. And in addition to healthcare, remote patient sensors can provide analytics of biomarkers related to COVID-19. The limitation of global healthcare system to treat low-risk patients could make remote monitoring both a valid personal and clinical response. A mass deployment of remote patient monitoring devices during the global health crisis could lead to a longer-term use of technology for both prevention and treatment. Another one, if I'm sure you guys heard about in the news, the apps are tracking people have been like in the hotspots. So basically, that's a smart cities platform to enhance pandemic response. Governments in China and South Korea are using phone apps to control population movement and track infected patients. In South Korea, infected population tracking apps are based on a data hub under development in the city of Daegu. While these measures may not be continued once the outbreak is under control, the public-private partnership may develop further public health management platforms going forward and may be a boon for smart cities platforms. COVID-19 short-term effect on the global economy. So we saw like effects on demand, production, like supply, and supply chain management, venture capital, investment. So they're directly affecting production and demand. While many states entered phase 2 of the reopening, which includes manufacturing, it is unlikely that companies and services will reach pre-COVID-19 capacity in the near future, which will result in continued production and demand disruption, creating supply chain market disruption. In the pandemic, manufacturers that rely on labor-intensive processes that require people to work closely together have been disrupted because of social distancing requirements. Financial impact on firms and financial markets. Although financial markets continue to reach new highs, the real test for investor optimism comes as companies report Q2 numbers, as that is the quarter most affected by COVID-19. The surge in bankruptcies is likely to continue amongst retailers and businesses part of the hospitality industry. Opportunities for private equity. While many PE-backed portfolio companies were undoubtedly negatively impacted by this crisis, many large private equity firms turned to raising dislocation funds to capitalize on struggling companies in need of capital. Unlike M&A transactions, limited partnerships of these private equity funds have adapted to the virtual world and have shown a willingness to commit to new general partners without conducting the traditional in-person on-site due diligence and opting for virtual on-site due diligence. COVID-19 long-term effect on the global economy. Increase in government expenditure. The battle against COVID-19 outbreak has already made the federal, local, and state government far more involved in Americans' lives than it normally would have been. As we watch daily briefings from public health officials and listen for guidance from our governors, we are witnessing the critical role the government plays in our lives and our health. America will need further involvement from the government more than ever in the aftermath of COVID-19. Decrease in consumer spending. The layoffs and trauma of the pandemic will force people to accept restraints on mass consumer culture and possibly move towards savings as a reasonable price to pay to defend ourselves against future contagions and climate disasters alike. Decrease in imports. The coronavirus pandemic will create pressure on corporations to weigh the efficiency and cost benefits of a globalized supply chain system against the robustness of domestic-based supply chain. Switching to a strong domestic supply chain would reduce dependence on an increasingly fractured global supply system. This potential shift would likely to increase costs to corporations and consumers. A new virtual world. COVID-19 forced many firms to realize that they can operate just as efficiently, if not more, with their employees working from home versus from the office. Combined with employees' reluctance to return to the office, working remotely may become the new norm. Cloud-based tech firms have already benefited from these tailwinds and look for more consolidation of the cloud-based industry, as larger companies will be willingly to pay a premium to acquire these smaller companies. And that's it.
Okay, what did you learn by doing this?
It was a good market analysis, honestly. mainly what industries, like short-term industry investment opportunities versus long-term, what's here to stay and what's here temporarily, how we can, like, this whole experience, like, I think is like forcing more innovation as opposed to using the traditional cookie cutter. Like, for example, working from home, I think is going to dramatically change the real estate hospitality business. We're like, this means there's like the demand is going to be lower for offices. Does that mean that rent is going to decrease?
Sure.
People moving out of the city to the suburbs, a lot of that happens. I mean, I personally know a lot of people who just packed and moved to Long Island or upstate or somewhere.
Sure.
So, and I'm sure there are a lot more that I don't know that are doing that. So we're talking about probably a decrease in rent and the cost of living.
Interesting. Sure. What's one thing you're going to remember from this page? One thing, 1 or 2 words.
1 or 2 words. Well, I guess just how many larger companies actually are taking advantage of acquisitions right now of the smaller companies.
Okay. Jillian.
I guess like sustained economic change. I think like that we've known that for a while now, but with the release of like this month of saying that in February we started going into recession, I think things are becoming much clearer that we're going to be going through a more turbulent patch of history, not even just socially, but also economically.
Good point. David.
Unfortunately, my takeaway from all this is we're moving towards the cyberpunk hell even faster than I originally thought we were.
Yeah.
It seems like we're going to have much more centralization of corporations in order to survive, which both to the not necessarily as bad to the consumer, but definitely to the worker is going to be a lot worse.
Okay. Good thing. Austin, what is your takeaway?
My takeaway is that it was really interesting to see that Walmart's e-commerce has increased, because I know them trying to compete with Amazon for a really long time on the online platforms. And I also have a question for Sahar. Do you see any companies like growing organically rather than like inorganically, like acquisitions during the pandemic, or is that not feasible?
I mean, to be honest, like with having like big players in the market, like Amazon Prime and all, I mean, I don't know if they can come up with the capital to, you know, to fund their operations to grow, then yes, but how are they going to do that?
Yeah.
So I mean, it's, I don't know, I think it's unlikely, but I mean, possible.
Okay. Great job, everybody. Thanks, Sahar. Good job, and a good discussion. I think these are. I think we should make them all. Everybody's got to do them live, because the discussion, I think, is honestly so rich that we all learn. So that ends this one. There's